All right, that being said, let's go ahead and move on. So those are all the currency pairs that we've got going for today, or all the trades that we have going for today. But I wanted to talk with you guys about how to identify a trend. I don't know if you guys know how to do that, but many of you may not actually know. It may seem simple, all right? You're probably looking at a chart and you're probably thinking, oh yeah, well that's bullish. Oh yeah, well that's bearish. But do you actually know how to identify? Are you just saying, I mean, yes, it's obvious when you're seeing it go from the bottom left corner to the top right corner. And these are the general principles that we talk about. If you want to know generally how to identify a trend, if it's going sideways, it's consolidation. If it's going from the top left corner of the screen, maybe up here, to the bottom right corner of the screen, it's bearish. If it's going from the bottom left corner, somewhere around here, to the top right corner, it's bullish. Simple as that. But how do you identify a trend normally? Like, if you were just to look at there's another way to identify a trend, is what I'm trying to get at. This is how. This is what you need in order to have a trend. You need an initial high. Let's see here. Okay, I figured it out. For some reason, I didn't have the drawing panel on. I had it off. I guess I never really used it before, so. Okay, we are going to go ahead and add a text. We had our, let's bring this up to 24. We had, I want to do dark blue. Okay, light blue. I guess it doesn't really matter. All right, we had our initial low, IL is what we're going to call it. We had our initial low right here. And we had our initial high, all right, IH, right here. And then we had, let's see, a retracement or an outside return. You can call it either one. I usually like calling it a retracement. So initial low, initial high, a new higher low. Okay, that's what we're going to call this. It's a retracement, but we're going to call it a new higher low, NHL, right there. And then we're going to do this. Pull this back right here. Get these two lines to connect, because that's what's going to look nice. Now we have a new structure high. All right. New structure high. NSH. And so there's another way you could classify. So we have an initial low, an initial high, an outside return or retracement, a new higher low, and a new structure high. You could also say a new higher low, because this low is higher than the last one. You could call this a new structure low, an NSL, and then you could call this a new structure high, NSH, or a new higher low and a new higher high, HH. Either, it doesn't really matter. The verbiage is, look, all that stuff, they all mean the same thing, okay? It's important to know that. It doesn't, to some extent, it doesn't really matter as long as you know what you're talking about. So I like to do initial low, initial high, a new higher low, and a new structure high, or a new higher high, or a new structure low. Well, actually, I would say a new structure low is probably lower. I guess a new lower low. So I say a new higher low and a new structure high, or you could say new higher high. But this, anyways, doesn't matter. Like I said before, but this is how you identify. Not only do you identify that we're moving from the bottom left corner of the screen to the top right. So this is definitely bullish, right? Even if it's the bottom left, even if it's all the way up here, we're still going from the left corner of the screen to the top right. So even with that taken into consideration, this is still a bullish trend. But this is what makes a trend. This is how you identify it. This is what composes, or this is what a trend is composed of. So it's very, very important to understand this. This is how you identify a trend. Now, let's go ahead and apply this to the actual charts. So let's see here. Let's go ahead and start from down here. Because this is easy, I already know where it's going, so this will be a pretty good example overall. Alright, so we have our initial low and our initial high. We have a retracement. We have created a new higher low. Then we reverse and we continue in the direction. Now we have created a new structure high, a new higher high, higher close. If you're going to call it a new higher high, higher close, that could be classified as an N3H or I can't remember if it's N3H or NH3. I think it's an N3H. Anyways, your higher high, higher close that has 3 H's, right? And a new lower low, lower close would also, you could also call that an N3C, no. Yeah, an N3L. An N3L or an NL3, new lower low, lower close, something of that nature. You could do that if you wanted. I've seen people do that before. It was rather confusing when I saw it because it's like inside baseball terminology that I had never heard of before. And I don't know if the industry, if that's like industry standard to identify things in that way. I don't think it is, but that would be another way to identify it. So we have another outside return, retracement, and then we have another new structure high. And we come back down. We got a new structure low, and look, where did the new structure low come to? Just like in this one, where did it go? Where did the market go? It came and it retested this structure level right here. You look left, structure leaves clues, right? So then we came up here, and now we're coming down. Where do you think it's going to go? Look left, structure leaves clues. Came here, found support, rallied. Boom! Like it's almost like someone planted a bomb under here and blew it up, and now look at it. It's all the way up here, and it blows all the way up here. All right, now we have another new structure high. New higher high, higher close. We retrace. Where are we going to go? We're going to come down here. Did we get all the way down there? No, we did not. We found support earlier. We found support above this structure level, but that's the direction we were going to go in. And then we continue to rally higher. And let's draw it up here. And then, of course, we continue lower. Retracement. Extension. Right? Every time the market makes a new high or a new lower low or a new higher high, we call that an extension. We call this a retracement or an outside return. I prefer retracement, so you could just say R. You could just identify it as R, retracement. And then new higher high, NHH. And the market extends. So the market always extends, makes an extension, makes a retracement, makes an extension, makes a retracement, extends, it retraces, and then it's going to extend again. See, this wouldn't be classified as an extension because we retested and we got rejected. We didn't make the extension up until up here. We extended and we broke above, made a new higher high, higher close. Then we reversed or had a retracement, and then did we extend again? Well, we didn't extend here because this is just a wick. We never closed above this structure level. And here, even though we did close above the structure level, we didn't really close above this candlestick or this candlestick, so it's not really a new higher high, higher close. The new higher high, higher close didn't really come up until all the way up here. Yes, you could say that what about all these little, green candlesticks that stopped, and closed above here? Yes, those are closes, so you can definitely know that we have closed above, but you don't want to take trades based off these because how do you know when it's going to stop, right? I mean, just look at this. At this point, let's say right here, this was the highest point at which, oh man, that stupid little plus sign's going to get in the way. Right here, this is when the market closed above all the structure levels. So yeah, we are now at a new higher high, higher close position. But is it going? But we can't really take a trade based off this because we don't know if it's going to stop there. And did it stop there? Nope. It went higher. It went higher. Went a little lower. Went higher, 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 and here we are. And now we are going to go into a bit of a retrace. We're going to retrace. We're going to extend. I didn't click on it right. It would be very helpful. We're going to extend, making another new higher high, higher close. And then, of course, we... Now, at first, this is looking like a bit of a retracement, isn't it? And we didn't really close below up until like down here. Okay, up until down here. Well, there's some candlestick wicks right here. Okay, so in this case, I know I just said that this is not considered a new higher high, higher close, or at least I wouldn't consider that, because there is a candlestick there that's in front of it. Really, it was more this candlestick that bothered me. More so than this one. But technically speaking, we did make a new higher high, right? But we didn't really close higher. We closed higher, but only here. And because of this candlestick, it just, to me, the new higher high, higher close was really up here. In this case, I would actually consider this, even though this red candlestick closed below all this other stuff, I would actually consider that this candlestick, and actually we should really extend this back down here, I would actually consider, well, and we'll do something fun here, that this was a new lower low, lower close. There wasn't this wick didn't extend longer. It was just the wick right next to it, so that doesn't really count in my book. A lot of this stuff is subjective. You may see this and you may say this is not a new lower low, lower close. You may think this is a new higher high, higher close. Okay, you may, a lot of it is subjective. It's all based off of what you see, all right? But anyways, we had a retracement. We got rejected. Big, long wick here. We have another, we retest the highs, and then we get rejected. And then we make a new lower low, lower close. Now, what happened here? This is now consolidation right here. This turned into consolidation, probably starting from here. Even though we made a new higher high, higher close, you can see we just kind of trended sideways. You see how the market just went sideways? Even though we made a new high here, it just kind of trended sideways for a couple minutes. So, you can see it's very obvious when you draw it in with blue lines. And if you haven't done this, I highly encourage that you do this. Now, you're going to learn, now if you wanted to, you could do this, right? You could absolutely do this. If this is what you wanted to do, you could draw in all of these structure levels. I don't recommend, you could do that. You could absolutely do that if you want. There's nothing wrong with that. I don't do that because really the trend started here, the move started here, and then it stopped here. That's what I see. So you don't have to do it that way, but it's something that you can do. So, okay, now what are we doing? All right, well, look at this. We came up here. We didn't make a new higher high, higher close, but we came up here. We retraced, and then we closed above here, making a new structure, new higher high, higher close with regards to this consolidation. And see, we're still kind of consolidating, right? We haven't really chosen a real direction. Okay, but we did break above here, so that this implies we're going to head higher. And are we going to head higher? Well, so far, no. Just kind of consolidating more, drawing everything in at this point when I wasn't before. I don't know why. Probably because I can't really see where it's going, right? Yeah, we'll draw it there. Actually, we'll skip that. We'll draw that there. Okay, just a lot of retesting, as you can see here. We ended up retesting this high right here, the structure level, and now we're kind of just going lower. All right, now we're kind of going lower, and did we close? No, so we are retesting again. So you see what I mean? Just massive consolidation. The Forex market actually consolidates 70% of the time. Did you know that? 70% of the time. this thing, it just absolutely boggles the mind, doesn't it? What am I doing? I don't want to do that. Let's actually draw this up here. Okay, now we have made a new structure high. We've made a new higher high, higher close. We have closed above here. We've closed above this level and all the other levels. So we finally have made a new structure high. Hallelujah. And now we're going down here. So let's go ahead and remove all this drawing. So where do you think the market is going now? Well, ideally, because we made a new structure high right here, odds are, I think we're going to retrace a little bit down here. So what we could do is could draw a fib retracement level from swing low here to the swing high. All right, look left, structure leaves clues. Well, we got tons of clues to draw from, right? We broke above here. Is this a false breakout? It could be a false breakout. We could have broken up and then we could continue to go down. So this could absolutely have been a false breakout, for sure. It's totally a possibility, right? And we could draw retracement level right here, put our entry on, and now if we get all the way down here, hopefully this isn't a false breakout, and we could end up making some money. So this is what we're going to do. And we are now going to look at this in the weekly market analysis videos. We are going to go ahead and we're going to look at this, and if this is a trade that ends up being taken, you will hear about it next week in the next weekly market analysis video. So guys, that's how we follow the trend. That's how we identify a trend. You need a 3-point move to identify a trend. Initial low, initial high, a new higher low, and a new structure high. Okay? Same thing with regards to a bearish trend. Initial high and initial low. A new lower high and a new structure low. Let's go ahead and actually draw that in just for fun. Okay? Aha. Ha 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 ha. Let's go ahead and do some text. Where's the T? Here it is, right here. We had our initial high. Alright. Put that right there. You know, I don't like that color. What color would you guys want it to be? You want to just do white? Ah! That's not the color that I want. White? Sure. It's kind of off-white, though. It's kind of weird. Sorry, I know most of you don't really care about this one lick, right? But right there, okay. But since we're doing it on the black background, it actually does make sense to do white. So let's do initial high. We had our initial low right here. Advertisements are getting annoying. I really just need a pro account. I've actually wanted a pro account for a while. Our initial high, initial low, a new lower high. As you can see right there. Yeah. It annoys me when these lines don't line up. That's cool. So a new lower high, because this high is lower than the first high, right? Or the previous, I should say the previous high. This high is lower than the previous high. And then a new structure low. Or you could say a new lower low. Like I said before, it doesn't really matter. New structure, new lower low, new structure low, whatever. We had a lower low, lower close of the candlestick. This is how you identify a bearish trend. Okay, just like the bullish trend we went over at the beginning of the video, this is how you identify a bearish trend. All right, so pretty cool stuff. So 3-point move: initial high, initial low, new lower high, new structure low. Okay, the opposite is true for the bullish side. Initial low, initial high, new higher low, new structure high. All right, that's how you identify a trend. That is the composition of a trend. That's what composes a trend. And I highly encourage, if you want to practice structure analysis, you want to practice price action, is what it's also referred to. Technical analysis, go in and do what we just did. Draw all the blue stuff. Draw the lines. Draw all the blue lines. Okay? That will really help you to understand and identify trends a lot easier. It's really, really good practice to do. So I highly encourage it. That being said, If you haven't checked out the website, go check it out. It's newmillenniumwealth.com. I know that's a mouthful. Join me on my journey, become financially free, and learn how to generate wealth that'll last for a millennium. That's the whole idea. I thought that sounded cool. So, anyways, but most importantly, if you like the video, give it a thumbs up. If you like the channel, you like what I'm doing, subscribe. If you do that for me, guys, I'll see you guys in the next episode. Remember, as always, know the risks, plan accordingly, and have a great day.